Morning, guys. I'm planning to spend some time every week to go through some of these sentiment plotted earlier in the week and to review how they go along in the week itself, if it's intraday or maybe just a 1 2 day swing, and we can do this review together. So I plan to do this 2 to 4 rounds in a week moving forward if time is granted, unless I have other ad hoc priorities. If you like and are interested to see more of these videos, please subscribe to my channel and give me a like, and that will give me a confluence to share in the future. So today I'm gonna talk about the Euro Swiss franc, which is the EURCHF, as you can see on my screen here. This screenshot was taken back on 21st of August, which I saw in someone's chat about asking euro, Swiss franc. Um, I will go a little bit deeper on the higher time frame to lower time frame analysis, but what you can see here is my sentiment that this is going bearish based on this range. So as you can see that it was plotted on 21st, 5 o'clock in the afternoon, and I was just waiting for the M15 switch shift in the market structure and take it down to the lower liquidity over here. So without further delay, let's hop into the analysis. So um, looking at looking at 4 hour, we have a lot of liquidity over here down here. So what I usually do is not to focus too far to the left. I will focus more to the right side, which is the most recent structure that we have. Um, and based on liquidity wise, you can actually focus a little bit on the left side because that's the liquidity that people place their stop loss at, and usually those liquidity will be taken out if the order flow is moving towards the line. So let's pop out to the structure that we have in this range here. So as you can see that this low, it didn't make a new high, which is a low high here. And I can put a quick, this is a lower high, and apparently this is a lower low. So if you go down to this here, there is tons of like imbalance um, form in this range in the premium. There are a lot more confluence that we can use this as as a short entry that we can. So there's imbalance, and there is if you're using the institutional concept, which was from the pips of Persia. This is the IC. So price push up, take out all this liquidity, all this liquidity, but the high still hold. The high still hold immediately after the push up, taking out all the early shots, and price push back down again to make a lower low. So this is the 4 hour IC, which is the bearish order flow. If we dive down to H1, this will get a little bit interesting. So when price come back to this IC, if we are still aligning with the order flow itself, you will see some kind of reaction that price doesn't want to go, doesn't want to breach that zone. So what we will do is to push up to the zone and push down again, and push up to the zone, push down again. So usually what I will do is to wait at the first entry here. Usually this first tap into the zone, we call it the mitigation, and usually that will just give a signal that yes, price is still holding the bearish confluence. But this is not an entry given because usually this first mitigation will be taken out and we will call it the liquidation at the second one. So what I'm going to do here is to draw out this buy side liquidity line. So immediately after the second tap into the zone and liquidate all the early shots, it forms a displacement to the downside and holding a lot of imbalance in this range. Or you can also use the same concept, which is the um, 1 hour IC. You can use the last candle, or you can use the last three candle, or you can use the um, few last buy candle before the large push down. So technically, it should be these three candles over here. As you can see that again, the price push up again to this zone and immediately break down to the downside and have another breakout structure to the downside here. So there is no closure in this zone, which give me a little bit more confluence that this is still holding the bearish narrative. And if you go down to M15, so the last liquidation candle will be the new IC. So we didn't see a typical mitigation and liquidation on the H1 POI, but we do see it on the M15. If you can already spot it, that will be it. Keep it simple. So whoever placed their stop loss over here, shorting from this FVG or imbalance that you can see um, at my cursor over here, they will get stopped out because this is not the perfect entry, because usually, as I said, the mitigation price action will be taken out. So there are a lot of method to do that. To take an entry, you can use the OTE. So use this 0.62, 0.7, or 0.79, whichever you prefer. Usually I will use this OTE um, in conjunction with the liquidity seen on the POI, which I will make a bit more confirmation whether that is the liquidity to be taken out before the large push, large continuation. So in this case, I would lean more towards to the 0.79 because that's the liquidity, that's the mitigation that we saw in this POI. Or you can actually you do it without the OT. Um, just place this shot over here, just right above the mitigation, and stop loss at the new IC. Depends on which time frame you are using. You can actually do the same thing here on the H4 itself, but this will be a longer swing. But take note that this this kind of entry will have a little bit of risk because um, for this case itself, if you happen to use the H1 as an entry, you will not get filled, basically. So yeah, um, price push up, take out liquidity without a closure, immediately push down and form another lower low, and price is just going to the downside. It's and yeah, this happened in about 1.5 days. I believe that the swap will be somewhere maybe about a few percent of the entry of the profit. Should it take more than that? And this is a good 7.5 R, or on H4 wise, it's about 5 R. Again, if you are using a 100,000 account platform, risking about 0.5%, which is $500, you will get about 2,500 from here, and um, about 3,500 from the M15 entry. If you have any questions, please put down in the comments. Ask me. I will reply to every single comment that I can in a day or two. And thank you, everybody.